Imagine a bank as a grand fortress, its vaults brimming with financial assets. Now, picture the Asset and Liability Management Committee, or ALCO, as the vigilant guardians entrusted with its protection. ALCO is a high-level decision-making body within a bank. It plays a critical role in ensuring the bank's financial health and stability. ALCO's formation stems from the realization that banks need a dedicated team to manage their balance sheets effectively. The CEO, recognizing this need, typically spearheads the formation of ALCO. They appoint the Head of Treasury, a seasoned financial expert, to lead this crucial committee. The Head of Treasury acts as the captain of the guard, guiding ALCO's strategic direction. Together, the CEO and Head of Treasury assemble a team of experts to form the ALCO, ready to navigate the complex world of banking and finance. The ALCO's primary mission is to strike a delicate balance. They ensure the bank has enough liquid assets to meet its financial obligations. At the same time, they strive to maximize profitability by optimizing the bank's assets and liabilities. This balancing act is central to a bank's ability to thrive in a competitive market. ALCO is not a one-man show. It requires a diverse group of experts, each bringing their unique skills to the table. This financial dream team typically includes the Chief Financial Officer, the Chief Risk Officer, the Head of Treasury, and other senior managers from various departments within the bank. The CFO is like the bank's accountant, keeping a close eye on the bank's financial performance. They provide insights into the bank's overall financial health, ensuring decisions align with the bank's financial goals. The CRO, on the other hand, is the risk guru. They assess and manage the bank's exposure to various financial risks, acting as a cautious voice in ALCO's deliberations. The Head of Treasury, as the designated leader, plays a pivotal role in setting the agenda for ALCO meetings. They are responsible for implementing ALCO's decisions, acting as the bridge between strategy and execution. Other senior managers, such as the Head of Lending or the Head of Investments, provide valuable insights from their respective domains. This diverse mix of expertise ensures that ALCO benefits from a well-rounded perspective. Each member contributes their unique understanding of the bank's operations and the financial landscape, allowing for informed and balanced decision-making. ALCO's responsibilities are vast and varied, but its core function is to manage the bank's balance sheet. Think of the balance sheet as a snapshot of the bank's financial health at a particular point in time. It shows the bank's assets, what it owns, and liabilities, what it owes. ALCO meticulously analyzes the bank's assets and liabilities, ensuring they are aligned with the bank's overall business strategy and risk appetite. They monitor key ratios and metrics to assess the bank's liquidity, interest rate risk, and credit risk. Liquidity refers to the bank's ability to meet its short-term financial obligations. ALCO ensures the bank has enough cash on hand or can easily access funds to meet withdrawals and other payment obligations. Interest rate risk arises from fluctuations in interest rates. ALCO develops strategies to mitigate the impact of interest rate changes on the bank's profitability. Credit risk is the risk that borrowers might default on their loans. ALCO establishes lending guidelines and monitors the bank's loan portfolio to minimize potential losses from bad loans. In essence, ALCO acts as the bank's financial guardian, ensuring the bank's financial fortress remains strong and resilient in the face of ever-changing market conditions. To guide their decision-making process, ALCO relies on a comprehensive document known as the ALCO paper. Think of the ALCO paper as the committee's strategic roadmap. This document provides a detailed analysis of the bank's current financial position, market trends, and potential risks and opportunities. The ALCO paper typically follows a structured format to ensure consistency and clarity. The first section usually provides an executive summary. It offers a concise overview of the bank's financial performance and key recommendations. This allows busy executives to quickly grasp the essence of the report. Following the executive summary, the ALCO paper delves into a detailed analysis of the bank's balance sheet. It presents key financial ratios and metrics, highlighting areas of strength and areas that require attention. This section is crucial for understanding the bank's current financial standing. The ALCO paper then moves on to assess the interest rate risk. It explores the potential impact of interest rate movements on the bank's profitability and proposes strategies to mitigate those risks. This forward-looking approach helps the bank navigate the uncertainties of the financial markets. Section 5. Key ingredients, essential contents of an ALCO paper. The ALCO paper is not just a collection of numbers and charts. It contains essential information that informs ALCO's strategic decisions. One crucial element is the economic outlook. The ALCO paper provides insights into macroeconomic factors, such as inflation, economic growth, and interest rate trends. This macroeconomic context helps ALCO anticipate potential challenges and opportunities. Another vital ingredient is the bank's budget and business plan. The ALCO paper aligns its recommendations with the bank's overall strategic objectives. This ensures that balance sheet management is not done in isolation, but is an integral part of achieving the bank's broader goals. The ALCO paper also includes a thorough risk assessment. It identifies and quantifies the various risks facing the bank, such as credit risk, market risk, and operational risk. This comprehensive risk profile allows ALCO to make informed decisions that balance risk and reward. Finally, the ALCO paper concludes with specific recommendations for action. These recommendations, based on the analysis presented in the paper, guide the bank in managing its assets and liabilities, mitigating risks, and capitalizing on opportunities. The ALCO paper is a dynamic document, constantly evolving to reflect the changing financial landscape and the bank's evolving needs. Section 6. The War Room. Importance of ALCO meetings. The ALCO paper sets the stage for the main event, the ALCO meeting. Held regularly, these meetings serve as a forum for ALCO members to discuss the bank's financial performance, review the ALCO paper, and make critical decisions regarding the bank's balance sheet. ALCO meetings are not just routine gatherings, they are strategic planning sessions where the bank's financial future is shaped. These meetings provide a platform for open dialogue and collaboration among senior executives from different departments. This cross-functional interaction ensures that decisions are made with a holistic understanding of the bank's operations. The frequency of ALCO meetings varies depending on the size and complexity of the bank and the volatility of the market environment. However, most banks hold ALCO meetings at least quarterly, with some opting for monthly or even more frequent meetings during periods of heightened market uncertainty. These meetings are crucial for maintaining the bank's financial health. They allow for timely adjustments to the bank's strategies in response to changing market conditions, ensuring the bank remains adaptable and resilient. Section 7. Guiding the agenda. Key discussion points in ALCO meetings. ALCO meetings follow a structured agenda to ensure all critical topics are covered. The meeting typically commences with a review of the bank's recent financial performance. This includes analyzing key financial ratios, such as return on assets and return on equity, to assess the bank's profitability. Next, the discussion shifts to the economic outlook. ALCO members delve into macroeconomic indicators, such as GDP growth, inflation, and interest rate trends. They assess the potential impact of these external factors on the bank's operations and profitability. Interest rate risk management is a perennial topic on the ALCO agenda. Members discuss the bank's exposure to interest rate fluctuations and review the effectiveness of existing hedging strategies. They may decide to adjust these strategies to align with the current interest rate outlook. Credit risk management is another crucial aspect of ALCO discussions. Members review the bank's loan portfolio, assessing the creditworthiness of borrowers and the overall quality of the loan book. They may adjust lending guidelines or set aside provisions for potential loan losses. Section 8. ALCO's impact. Ensuring bank stability. ALCO's meticulous focus on balance sheet management is not just an academic exercise. It has a direct impact on the bank's stability. By carefully managing the bank's assets and liabilities, ALCO ensures the bank has sufficient liquidity to meet its financial obligations. This means that depositors can withdraw their money when they need it, and the bank can honor its commitments to creditors. Furthermore, ALCO's proactive approach to risk management helps safeguard the bank from potential financial shocks. By identifying and mitigating risks, ALCO reduces the likelihood of unexpected losses that could threaten the bank's solvency. In times of economic uncertainty or financial crisis, ALCO's role becomes even more critical. The committee acts as a steadying hand, guiding the bank through turbulent waters. Their decisions help to maintain confidence in the bank's financial stability, reassuring depositors and investors alike. ALCO's contribution to bank stability is paramount. It is the bedrock upon which trust in the banking system is built. Section 9. Beyond stability. ALCO's role in profitability. While stability is a primary concern, ALCO also plays a crucial role in driving the bank's profitability. By optimizing the bank's asset and liability structure, ALCO aims to maximize returns while keeping risks in check. For instance, ALCO analyzes the bank's loan portfolio to identify opportunities to extend credit to creditworthy borrowers at favorable interest rates. They also explore avenues to invest the bank's assets in a diversified portfolio of securities that offer a balance of risk and return. Moreover, ALCO keeps a close eye on the bank's funding costs. They explore various funding sources and manage the bank's deposit base to ensure that the bank has access to funds at competitive rates. This prudent management of funding costs contributes directly to the bank's profitability. ALCO's ability to balance risk and return is essential for a bank's long-term success. It ensures that the bank can generate sustainable profits for its shareholders while fulfilling its obligations to depositors and maintaining its financial stability. Section 10. The future of banking. ALCO's enduring importance. As the banking industry continues to evolve, driven by technological advancements and changing regulatory landscapes, ALCO's role remains as relevant as ever. In fact, the increasing complexity of the financial world makes ALCO's expertise even more crucial. Banks are facing new challenges, such as the rise of fintech companies, the growing importance of data analytics, and the need to adapt to climate change. ALCOs are at the forefront of navigating these challenges, using their expertise to develop innovative solutions and ensure the bank's continued success. The composition and responsibilities of ALCOs may evolve over time to meet the changing needs of the banking industry. However, the fundamental principles of balance sheet management, risk management, and profitability will always be at the heart of ALCO's mission. In conclusion, the Asset and Liability Management Committee, or ALCO, is an indispensable part of any modern bank. It is the guardian of the bank's balance sheet, the architect of its risk management framework, and a key driver of its profitability. As the banking industry navigates the challenges and opportunities of the future, ALCO's role will only become more critical in ensuring the stability and success of banks worldwide.